flat start. Yes, it's point. Okay, now it's getting a little worse. It's about 35 points down.
The lowest point of trade, 82.62.
Market is, of course, struggling. It's managed to bounce back above at least 8,200. At the index level, you're only looking at a 2.5% decline on, the mid-cap indices.
Markets erase all of Tuesday's gains. Sensex and Nifty fall 4% apiece. End at one-week lows. Financials and IT stocks drag the most.
MSCI to wait before making changes to its indices with respect to India. Markets expected India to receive between $15 and $16 billion in passive foreign inflows on the back of these changes.
Auto stocks under pressure. M&M's total sales drop a whopping 88% as domestic auto sales plunge 90%. Tractor sales drop 31%. Maruti's total sales drop 83%. Escorts, Ashok Leyland also report dismal numbers.
Biocon rallies after its Malaysian insulin unit gets the green flag from the US FDA. ThyroCare clarifies that there is no blanket ban on private testing to collect samples until kits are received.
Well, the Bears got the upper hand on Dalal Street yet again. Tuesday's gains were erased. Sensex dropped over 1,200 points and traders got rattled by the increase in COVID-19 cases all over the world, including in India. Welcome to our special show, The Market Sell-Off. I'm Lata Venkatesh, with me my colleague Prashant Nair. Hi Prashant.
Hi Lata. No April Fool's Day today. I mean, the Bears were not fooled by the risk rally which we've seen over the last couple of days, and probably some were, but most weren't. Firmly lower right from the beginning, and very few bounces along the way. It's a packed show. We'll wrap up the day's action for you. We'll get your opinion. Ajay Srivastava of Dimensions Corp, Jeff Chaudhary at RLC Ventures, Sayan Mukherjee of Nomura, and Nilesh Shah of Kotak Mahindra Asset Management Company are the views on markets that you're going to hear over the next 30 minutes. Private testing lab, ThyroCare's A. Velumani and Biocon CMD Kiran Mazumdar Shaw will of course be talking about the fight against COVID, how our private sector companies helping. And we'll also have expert opinion from the banking sector. IBA Sunil Mehta, Ajay Srivastava, CEO. So we'll have Sunil Mehta of Indian Banks Association join us with some opinion. So that's essentially what you'll hear over the next 30 minutes. As always, let's spend 2 minutes looking at the day itself. Lata.
Well, I don't have much more to add. All of Tuesday's gains were wiped out, and then on hindsight, everyone said, oh, Tuesday was always a made-up gain, end of the year, NAV management, etc., etc. But we had more bad news. I mean, the Wall Street indices, Dow Jones, DJIA, had ended 1.8% lower, and Dow futures went from weakness to weakness throughout our trading time on Wednesday, pointing to some 700-point drop at the open itself. The FI numbers that came from Tuesday also were quite dismal, 3,000 crore terms of selling. And the way in which the market sold off in a Wednesday's trade seemed to indicate that people want to stampede out, just get out of the exit at any price. And then you realize that the reason probably was that the MSCI index rejig, which would have worked to the advantage of a stock like Kotak Mahindra Bank, is not going to happen. It is getting postponed. But of course, Prashant, I'll count on you to explain that in greater detail later on. The worries, of course, included the rise in COVID cases as well. But besides financials, what else did badly? So
IT did badly, Lata, which was, a pressure point. So large cap IT stocks. And of course, financials were the pain point once again. Private banks in particular. Public sector banks have had little say in moving the index or the market for a while now. It is private sector bulk of the time. Okay, Nifty cuts in terms of stocks. As I said, IT, Tech Mahindra, TCS were some of what sold off quite a bit. Kotak Bank, Axis Bank, essentially from the large cap banking space. UPL was down, HUL, State Bank of India, HCL Tech, Britannia and Hindalco were some of the others which were down and out. Gainers on the large cap front, Hero, Bajaj and Yes Bank. So short list, 2 auto names and 1 Yes Bank, which is essentially done well when everything else is done pretty poorly. Broader gains, and by the way, I'm starting with broader market gainers because advances were higher than declines. But very clearly what went up the list of stocks which went up on volumes is extremely small. So I'm just listing 3 names here. Godrej Consumer, Just Dial and Prestige Estates, between 5 and 8% gains. But the list of losers, although in absolute numbers smaller than gainers, I mean, what was down on heavy volumes. JSPL, Escorts, Shriram Transport fell with a thud once again. PVR, Jubilant Food, Tata Consumer, MRF, UPL, Mindtree, Bharat Electronics, Chola Finance. So, I mean, you know, it's a long list there, and I'm just limiting myself to the top traded ones. Lata.
I would assume that people also sold off because you don't know what one day's holiday has in store for you. You don't get to trade tomorrow. So what if the Wall Street indices took a plunge, or what if there was a spurt in COVID cases? I guess all that was preying on the minds of traders. But to understand more about investment, let's invite 2 veterans, Jeff Chaudhary, Chairman RLC Ventures, and Ajay Srivastava of Dimensions with us. First to you, Jeff. Thank you very much for joining us all the way from London. What's the sense? Can we draw a line and say that most of the bad news is in the price? Or are we going to see, it's better to opt out and just let things go by for now?
I'm probably going to give you an answer which is actually a bit surprising. About 6 months ago, if you remember, when we chatted, I was very, very cautious about the market, and I really didn't like the valuations, and I thought the market was going to go down. Obviously, we've had the coronavirus over this period, and obviously the markets have gone down very significantly. I think now, as we're going to the second quarter, I think one should be doing the following, which is making a list of a few blue chip companies at the sort of levels which be interesting, and during the course of this quarter, looking to buy. And I think that's basically the strategy. So don't use all the firepower today or this week, but definitely during the course of this quarter, you want to be at the situation where at the end of June, you want to be fully invested again. And so, as I say, I think it's slightly surprising from where I've been coming from and what I've said to you before. But I think now the opportunities in the market are starting to become interesting again.
Yes, it's a surprise and a pleasant surprise that you're saying you're buying something. Prashant?
Absolutely. Good to hear that, Jeff. Just coming back to you, Ajay Srivastava is also with us. Ajay, good to have you here with us. I mean, it's been difficult markets. I don't know if you heard Jeff, he's essentially saying that start making a list of blue chips you want to buy and start deploying funds slowly. Don't go all in. Sensible advice. Where do you stand, Ajay, now?
Well, I think it's a very sensible advice, but I stand on the basis that buying has to be predicated on what is the government's action plan going to be on addressing the issues in the market. Because if that is not good enough, then you should be using every rally to exit, not to enter in this market. Because, you know, short-term bounces will happen because market is very illiquid right now. Whenever we open up, there'll be some kind of liquidity coming into the system. Some averaging out will happen. But I think longer term, look at 9 months to 1 year scenario. If the government's package is not good enough, then there's going to be really rough weather. Because, okay, first 3 months, there is forbearance, there is, okay, people will say exemption to bonds, and everything will happen. 3 months later, when the reality starts to hit these companies, the default will start. There'll be no banks to bail them out at this point of time. There'll be no government action. So my view is that unless there is some serious government action which takes place, any rally should be sold into, not bought into in the next 3 months. And this is our only window. 3 months down the line, India has got this is also the weakest time for the economy of India, the lowest purchasing power. And let's also understand that this is not going to go away very easily, Prashant. India revolves around marriage seasons. Marriages are not going to happen or may not with the same gusto, so purchasing is not going to be good. So my view is, unless seriously government come with something absolutely fantabulous, do not buy and sell out this rally.
Oh, yes. I take your point entirely. Complete fiscal hawks who have spoken on the channel, people like Dr. Rangarajan or, a whole host of others are constantly telling the government that, this is not the time. Okay, today we had Abhijit Banerjee, the Nobel laureate, all of them saying this is the time for fiscal expansion or quantitative easing. Your point is taken. Jeff, on that issue, you're buying Indian stocks as well?
Yeah, I think selectively. I mean, I think what do we do? What do we know? Well, we know two things. First of all, we know that earnings are going to collapse for the next 2 to 3 quarters. We also know that the actual coronavirus situation in terms of the amount of cases and the amount of deaths hasn't peaked yet. So you would have thought that in that environment, why am I thinking about buying some stocks? Well, one reason is that the stocks are now 40 to 50% cheaper than they were 6 months ago. And I think we're not going to have a situation where we buy stocks when everything is rosy again. We want to be doing it when a situation where things are not looking so good. So I think looking forward, as I say, I think we should be starting to think about buying stocks again. And every single government around the world has increased fiscal expansion. So longer term, two things going to happen. Debt levels obviously are going to increase at the government level, but also it will start putting money into people's profits again. So that's why I'm saying this is the wrong time to be ultra bearish. This is the wrong time also to be ultra bullish. Selectively, I think the market makes sense, both India and other markets, to be putting money to work during the course of this quarter.
Ajay, you said, well, if the government doesn't put in substantial amounts of money, you as an investor should not put in money. I mean, basically, that's the message. What are you hoping to see really? Because we know that there isn't very much on the table. I mean, it's fine to say that they should forget about the fiscal deficit. Probably they should. But as an investor, what are you looking for?
See, more than fiscal, it's not about just the fiscal deficit. I think it's also the timing of the relief. 100 rupees today is worth 1,000 rupees 3 months down the line. It's more to me, Prashant, the issue of timing and what kind of relief. A lot of it can be, qualitative relief. Like I'll give you a very small example. It's a non-monetary example. In the middle of a lockdown, suddenly I was inundated with my company telling, we need to fill up a form saying, I need to be COVID compliant and please give it by March 31st, I'll be prosecuted. Now that shows a mentality which is that you make it easy for me to work as if I'm shut down. Now you're making another form to come up and do it. So my view is that lots of monetary is only one issue. There are a lot of qualitative issues which have bearing on our operations. And there is the magic in the whole deal as to how you can work it through. Everything is not money, some is money, but make it very easy, get the hawks out of the way, get the NC out of the way, get these things out of the way, make it easy, make it fast, make it fluent for people to get back to business. More and more regulatory, more and more audits, more and more, all the audits are going, this income tax audit, GST audits, and all these things, these are all going to hamper operations.
Absolutely.
So money is only one thing, Prashant. It's all about making us now work for the market instead of working for compliance.
Yeah, the ease of doing business, not quite in the DNA of our legal, judicial and bureaucratic systems. Take your point, Ajay. But nevertheless, you buy nothing at all, Ajay?
Well, my net positions, Lata I think mentioned last time was short, which is the IT stock. I have got a very small holdings now. Basically, all my holdings focus around consumer, because that's the only companies which are running and running well. Banks, we have almost zero at this point of time because we don't know where we're going to come from. US, yes, we started buying in the US market again. That's been a bigger holding today in the US markets, which we think the tech sector is going to do much better than what we, all the other sectors. So that we are buying it. But in India, really, and Lata, I must share with you, I'm not alarmist, but you may find to a surprise that very, very large industrial groups in India may find trouble to even remain alive in the next 12 to 18 months. And I'm talking about very, very large group because the debt overhang is now huge today.
No, I get your point entirely. This is hardly a time when you want to be caught with a large levered position. Jeff, just to come back to you, do you expect recession? If yes, how long? Or do you think it will be trumped by this quantities of money that all central banks are printing?
Yeah, I think we're gonna definitely gonna have a very, very weak Q2. I mean, as you know, a recession is defined as 2 back-to-back quarters of negative GDP growth. Actually, perversely, we may not have a recession in a technical sense because Q2 will be very weak, and actually we might get a bit of a bounce back in Q3. But I think two things are going to happen. First of all, a lot of companies will go bankrupt. That's absolutely true. I think a lot of companies will also suffer in terms of their debts. But I think more importantly, if you look at the consumer space, particularly as your previous previous guest said, I think the consumer space is in good shape because of obviously demand for basic consumer goods. So, a buying opportunity does appear in those type of companies in the consumer space, like ITC, Hindustan Lever, etc., and Colgate. Companies like that, they're going to be here next year and the year after and next 50 years as well.
Fair point. Ajay and Jeff, thank you very much for joining us with your thoughts. Actually, the best performing companies have been HUL, Dabur, Britannia, Nestle, and for that matter, the Pharmas, Ipca, Abbott, etc. Year to date, it's either Pharma or FMCG that's done well. On that note, let's take a break. But before we do that, here's some more market opinion that we got through this week. We are back in a jiffy.
What we have seen so far looks even worse than that, simply because, the way the stocks have corrected, the intensity of selling, is much more than what we had seen during the global financial crisis. So I do accept that markets are, much cheaper, and therefore one should selectively look at across sectors. But my point here is that I don't have much visibility as to how long the uncertainty will remain. See, till that uncertainty remains, right, I think we may not be aligned to the fundamentals. And therefore, there is a risk that the valuations remain cheap or get even cheaper.
We should be nearer to 5-digit number, not necessarily 5-digit number, but nearer to 5-digit number in terms of flows, almost as good as February. Now, as the markets have become cheaper, we have increased equity allocation. So some amount of money has shifted from debt into equity in this correction. So this buying which you have seen over last 1 month, partly it is enhanced equity allocation in balance advantage fund and asset allocator fund. Partly it is the flows which we have received.
Welcome back to our special show, The Big Sell-Off, and we now come to the second headline that we got from the equity markets today. The MSCI, Morgan Stanley Capital Index, has said that it will wait before it makes any changes to its indices with respect to including Indian stocks. This came as a disappointment as India or Indian investors expected to receive between $15 to $18 billion in passive foreign inflows on the back of expected rejigs in the MSCI. Prashant, if you can take us through this entire thought process and the souring of disappointment.
Oh, absolutely. So this is what we picked up from various institutional brokers that we've spoken to. So basically, starting today, the 1st of April 2020, sectoral FII limits, how much FIIs can buy in a company, were going to go automatically to the sector limit. I mean, for example, if in real estate, say company X has FPI limit set at 40% and the sector limit is 100%, I mean, the company limit would default automatically to 100%, which means that much room opens up as for companies to buy. This is effective from the 1st of April. Before this, any company which came to the market, automatically the default setting used to be 24% FPI limit, and then they used to need to take board approvals to go higher. From today, that was not the case. What was the hope then? The hope was that since in a majority of cases, I mean actually bulk of cases, the sectoral limits are much higher than company-specific limits, suddenly a lot of room will open up. And what that will do is, it will sort of allow index aggregators like MSCI, on which a lot of huge amount of passive money is benchmarked to increase the weight of India. Some estimates, as you also said, suggested that India would receive passive inflows of between $15 and $16 billion. Companies like Kotak, for example, could take in $1.5 billion to $2 billion in inflows. So, I mean, so that hope was there. What MSCI has now said is that, well, we're not going to be doing any of that right now. Our MSCI, the review is in the middle of May is going to happen, but we're not going to change anything with regards to India. We may consider this later. And the reason they're doing this is because they want to see very clearly where are sectoral limits, is this really going to be implemented? So they basically want to see stuff now happening on the ground now that we're on the 1st of April before they themselves start to make these changes in their indices. So probably not in May, but in the September review, MSCI may take this up. It's just getting pushed out, basically, deferred. It will happen at some point, but it's not happening right now. That was the disappointment. Radha.
All right, got that. Well, with that, let's get to the third headline from the street, or what worried the street today. Automobile companies reeled under a double whammy. For the month of March, there was a nationwide lockdown, and the deadline to stop the sale of BS4 vehicles also hit sales. Maruti Suzuki, Eicher Motors, Ashok Leyland all reported terrible fall, massive falls in their March sales. Sonia here with all the numbers.
Well, it's been a tough last few months for the auto sector, and the lockdown has made it only worse. In fact, in the month of March, the sales across the board have been pretty weak. Remember, the lockdown started on the 24th of March, but even prior to that, a couple of states like Maharashtra and Kerala had locked down, because of which production had shut down across OEMs. If you look at the numbers this time, Maruti has reported a very weak sales in the month of March. Total sales have halved, down about 47% at 83,792 units. Across the board, exports are down 55%, domestic sales are down 46%, and compact car segment as well is down about 51%, the segment that sells the Wagonars, Swifts and the Celerios. But the biggest damage really has come in the commercial vehicle space. You've had both Eicher Motors and Ashok Leyland reporting very weak numbers this month. Ashok Leyland, in fact, has reported a 90% year-on-year drop in sales, coming in at just 2,179 units. It's the medium and heavy commercial vehicle segment that has gotten hit very hard, so 90% crack there. LCVs, light commercial vehicles, are down by 94%, and Eicher Motors as well reported a massive drop of almost 82%. Remember, the management of Eicher Motors had indicated to us that there is a complete dearth of new orders for sure because of the lockdown, but even earlier orders that were signed and confirmed are now being cancelled due to the lockdown and the challenges that lie ahead. So all in all, weak numbers have come through.
Weaker still as we head into April. Sonia, thanks very much for that. The fourth headline today, Biocon clocked gains after its biosimilar unit in Malaysia received an establishment inspection report from the US FDA. We caught up with the company's CMD, Kiran Mazumdar-Shaw, and she says that biosimilars could lead the way in reducing healthcare costs. Listen.
Certainly, this is an important, EIR that we have received, and it's a good EIR. So I think it sort of makes us feel at least confident that we will get the approval sooner than later. I think we've always said that it will be in the first half of this year. So I think that's what we stick by. Post-COVID, I think there's going to be a huge effort to bring down healthcare costs. And I think biosimilars are certainly going to be extremely important in this effort. And I believe that insulin therapies are also going to be, play a very important role in cost cutting.
Okay, staying with pharma, there's no blanket ban on private testing in Maharashtra. Contrary to what media reports are saying, that's the word we got from the head of Thyrocare, the chairman and managing director and CEO, Mr. Velumani. Speaking to CNBC TV 18, Velumani dismissed reports of a ban and said that private labs have been instructed to collect samples only after they receive all the required kits. Listen.
I don't think the government has put in any restriction to all players in blanket. There are a couple of laboratories who did not have stock. Anticipating a stock, they were collecting blood or the swab, thinking that they would get a kit probably by next 6 hours or 8 hours or 24 hours. But unfortunately, since it involves a lot of logistics in importing clearance and the transportation, DMC has told some laboratories who don't have a kit, don't collect a specimen till you get inventory. Not a blanket, no one should collect.
Okay, so that is Mr. A. Velumani at Thyrocare. Given the spate of questions following the RBI's moratorium on all loans, we caught up with Sunil Mehta, CEO at the Indian Banks Association. He says that customers must clear their EMIs if they can, despite the three-month moratorium. Here is why.
So if the 3 installments which are payable during the month of March, April and May, if they are paid maybe after 5 years as a back end, it will also entail an interest cost for the period of 5 years, because those 3 EMI installments will have a interest accrued on it. Those who are in a position to repay, those whose cash flows are not affected, it is advisable for them to continue to repay their installments if they find that they don't have any problems in paying for it. But if the particular segment who think that, yes, I don't have a cash flow, then at least they can defer their installment for 3 months along with the interest, and they can plan it out, its repayment as per their convenience.
Okay, so that's a great deal that happened on the street today. And with that, we wrap up this edition.
Thanks very much.
The market sell-off.
Absolutely, and it's back to tracking global markets and when we come back, by the way, Lata, on Friday, we'll have 2 days worth of data to look at.
Oh yes, oh yes. That'll be a big day. But for the moment, enjoy the holiday ahead.